Welcome back, guys, to another roundtable. My name is Adam. I have Rusman.
Hello.
And Victor.
Hi, everyone.
Thank you once again for joining us. And today we're going to talk about Buffett and why he seems to be holding on to cash right now. So there are a lot of articles recently about Buffett preferring cash. He was about, I think, 130 billion, holding about 130 billion in cash right now. So we're going to discuss whether this is something that us as retail investors, whether we should be holding on to more cash because maybe Buffett thinks something is going to happen and that's why he's holding on to cash, and we're going to find out whether that's actually true. All right, so maybe just a quick recap of Buffett's recent investment decisions and how much cash and all that.
I think if you look at the cash holding as of first quarter of 2023, I think he has close to about 130 billions, right? And a bulk of it is actually parked under the short-term T-bill, right? So I would say 80% of it. So I think that actually gives him a better return. And yeah, so if you look at his strategy for Berkshire, right, and the percentage of cash that he has in the portfolio depends on how you measure, right? Whether you are measuring against the total assets or basically the listed equity plus the cash, okay, which is what I think we always do, right? I mean, you look at the portfolio level in terms of a public listed equity plus the cash holding, and then from there you can actually measure your cash holding percentage. So if I were to base on that, I think we can see that his percentage of cash holding as of first quarter of 2023 is about 26%. That actually has increased from last year 2022 about 25%. So it's actually marginally increased.
So just a little bit more.
A little bit, okay. Right? And actually if you zoom back to 2004, 2005, okay, or 2007, his cash holding was as high as 33%, right? And when 0809 crashed, he actually deployed a lot of cash because at the time there were a lot of ideas, and that cash holding actually dropped to about 16%. And then slowly, as the market had a bull run from 2008, 2009 to all the way to 2017, his cash holding actually beefed up from 16% to about 36% of his equity portfolio, including the cash, right? And then 2018, I think we got trade war, so he started to deploy again. And since then, this cash holding has been hovering between 27%, 26%. And of course, 2021 has gone up to 30% because 2021, you remember, there were a lot of crazy, a lot of people basically investing in the stock market, and the valuation was at all-time high. So I think he couldn't find any ideas. And I think he also missed that the opportunity where 2020, when there was a big drop in the stock market, okay, so he didn't really deploy that much other than, Apple, one of his biggest investment at the time, right? So but to date, I think his holding has been around 25, 26, 27%. So actually, he has been holding cash for a long time.
Okay, I think that's a pretty good. I mean, that's a pretty good way to look at it, because Buffett seems to have a very clear philosophy of how he deploys his cash.
Yes.
Because like when it gets really expensive, he seems to like really hold on to a lot more cash, like you said, up to 30% of his portfolio. And then when the bargains really come, he just goes ahead and just does it, right? He just really just buys and buys.
Yeah. So basically, I mean, I think every investor, if you're a long-term investor, you know that if you don't have the cash when the market crash, that's the worst thing it could ever happen to you, right? Okay. So he doesn't want to see himself in that situation.
I mean, I won't say it's the worst thing. It just feels really like, I'm missing all the bargains.
Yeah, he just couldn't buy, right? So that has been his philosophy, to keep cash. Apparently, I think it seems to be about 25% his comfort level.
So this is where he is right now.
Yeah.
So about 130 billion in cash. I think the question could be, why isn't he deploying the cash right now? Because he's holding quite a bit. Yeah.
So I think firstly, we need to understand he still do have operating business to run. So some of the cash he keep is for the insurance business also, in case anything happen, right? But majority of the time, I think he's a very disciplined allocator, right? He only buy into companies when the valuation is right. So I think especially after the 0809, I think the valuation has generally more on the higher side because of the low interest rate, right? So if you look at all his past acquisitions, he tends to buy companies that are below 10 times pre-tax earnings, right? So let's look at 10 times pre-tax earnings is basically, let's say the share price is $10, your pre-tax earnings is $1. So that's your 10 times, right? But then that is pre-tax. So if you were to tax it, 40% tax for the US, so that will be 60 cents. So you 10 divided by 60 cents, that will be about 16.66 times after tax, which is your PE, right? So if you invest the 16.66 times, right, that will be 6%. And that has always been Warren Buffett's benchmark when it comes to investing. If you know that in his early years where he managed a fund, he always set a 6% hurdle rate benchmark. He says that you have to make the 6% for the investor on top of the assets, then he makes the money. So I think this benchmark thing have already ingrained into his mind that he every time when he buy into a company, right, he makes sure that it has the 6% benchmark, right? But when he was a smaller time investor, right, it was easy because when you buy small cap stocks, micro cap stocks or mid cap stocks, right, they tend to be more inefficiency, especially small cap stocks. So there's a lot of companies that are traded at below 10 times pre-tax earnings. But as its amount get bigger, right, the bigger companies tend to be much more efficient, right? And the only time where bigger companies will give him the same valuation is when suddenly they report back quarters and all this. Example, Apple when he bought, right, was the first time where the sales actually dropped since 2007. At 2016 when he dropped, the share price tanked, and that gave him a very good valuation. He bought it actually at about 12 times PE. So for him, right, because of the universe of stock become very small, so that's why you see that he always sitting on cash, but he still stay true to his philosophy. Only when the company below 10 times pre-tax, he will buy into them. So I think he's very disciplined when it comes to buying, right? So if you look at like the recent OXY, I think it's Occidental Petroleum, and you go to the HPQ that he bought, right, it's all below 10 times pre-tax, which is less than 16 times PE. Right.
All right, so he's very disciplined with, even when he's grown as an investor now, he's like one of the biggest, he still sticks to that philosophy, or his formula basically.
Yes, correct.
But as he's so big now that he has to really wait for the opportunities to come. He can't just like find the small things here and there because they don't move the needle enough.
Yes, and the opportunity must be big enough for him to move the needle, right?
Yeah. So it's actually hard for him to move. So he's holding a bit of cash at this point. So I guess you could say that maybe he doesn't find any value at this point in time. He's happy to wait because I think there's Buffett. He's just happy to wait all the time. So based on that, what is the market valuation right now? Is the market cheap, expensive in the US?
I think if you were to look at the PE chart over here, the S&P 500, the average is around 23, 24. So right now we are just traded slightly above the average of 23, 24. So that's I think around 25. Okay. Right? So I think the market generally is more fair. If you look in terms of the companies out there, generally it's not very that cheap, right? But it's also not that expensive. It's so fair for most of the companies.
There are not many bargains around?
Yeah, but if the smaller caps, there's definitely is. Okay. But on the general, the large cap, the mid cap, generally is every companies are generally more fairly priced.
Okay. But again, also depends on the interest rate, right? If interest rate stays high for the next 5 years, 10 years, then you can expect that the average PE to contract for the next 5 years to 10 years.
So I think what a lot of people thinking is that the interest rate in the next few years, especially the time when I went to the DBS AGM, they said he expect that the interest rate won't go back to 0 or 1%, right? You're going to stay between 2 to 3%. So if you were to stay between 2 to 3%, which is higher than the 0 and 1%, I think generally the average, like what Rusmi said, will start to contract already.
There's PE compression.
Yes, correct.
Right. I think this is one of the things that I think Buffett highlighted during his recent AGM as well. Yeah. That the era of easy money is gone. Correct. So it's not going to be like that anymore.
Yeah, and also he also got mentioned last time. I think somebody asked him regarding about the current PE, like was a bit high, but he said that if the interest rate maintains so low, this PE is going to be cheap 10 years from now, right? But then that's not the case. Right, because the interest rate is not going to maintain that low anymore.
All right, but we never know, right?
We never know.
Another crisis that caused the Fed to reduce the rate again. So
Okay, so I guess the market now is not cheap, not expensive. Like you said, based on the 10-year historical average, is right fair. Down the middle. It's fair. Yeah. So as a retail investor watching this, or reading articles about Buffett holding on to cash, what should the retail investor do? Should they hold on to more cash? Should they wait for for the opportunities to come inside the hold more cash? What should
I think it depends on your position. I mean, if you are someone who are fully deployed and you don't have cash, it's time to beef up cash. Okay, because you need to, just like what Buffett did with his portfolio, he always have some cash in his holding, right? 10% minimally. I think 20% is a good benchmark to hang around. Of course, if the market stays expensive, of course, it can beef up to 30%, 40%. Yeah, so and if someone who already have a cash and if you can't find any ideas, just sit on it, just like Buffett did, right? Okay. So because if you can't find good opportunities, I think it's best not to do anything. It's okay to sit on cash.
All right.
Yeah. So I think your cash level should go up and down depending on the situation. But please do not be totally out of the market, because you never know what happened, right?
Yeah.
So I think back then in 2011, I think one of our friends actually thinks that because of the Euro debt crisis, there's going to be a double dip after the 0809. So that means it's going to be a more worse crisis. So he's trying to predict the market, and he actually cashed out fully.
Yeah,
On
everything.
the market, everything.
Okay.
And holding cash and waiting for the next big crash, right? And after that, the market just went up for the next 10 years.
I didn't remember. I don't remember a crash after that. Yeah.
Yeah. So I think you can never predict whether it's going to be a bull run or a market crash, right? Because especially now, a lot of people is expecting the economy is going to recession and all this. I mean, if you listen to what the news say, then probably you can't get alpha, because everybody thinks the same as you, right? How can you be against the crowd? That's the thing that you need to ask yourself.
And the interesting thing is that this recession talk usually appear or come out very strongly whenever we are in the bear market, or whenever it come out almost every year actually.
Okay, there's always talk of a recession or the next crash. I mean, it always happens.
Yeah.
So I guess the market now is fairly valued, and I mean, it doesn't make sense for anyone to just cash out fully. Like you said, I will always stay invested. I mean, if you're investing in great companies anyway, there's no reason to sell. But let's say if a particular stock is highly overvalued right now, what would you do?
Then I think you should cash out some to beef up your cash position. Right?
Yeah.
I mean, if your companies are, very, very expensive, the valuation is ridiculous, I think you should cash out. Protect your downside first.
Okay.
Right? So example, let's say you invest 10,000 and it went up to 100,000.
Okay.
Right? Maybe you can cash out 10,000, or maybe cash out 20 or 30,000. So you lock in some profits or the base. So anything excess, or if the market were to crash, right, you still cover your base. So that means you always have you already have a base always being covered already.
Yeah. Okay.
Yeah.
So I guess you would do that for really expensive stocks that you hold,
Yes, correct.
overvalued. You just lock in some of the profits, but never fully cash out. You wouldn't do that.
Yeah. Investing is not a binary option where all in or
correct.
all out. Right?
It's just more of like a percentage, like how Buffett has been doing it for decades.
Allocate
right?
your capital, right? If you can't find ideas, then he beef out your cash. Actually, if you can't find ideas, and naturally, because Warren Buffett, he has this operating business that actually print a lot of money for him, and that cash will just keep on falling. Okay, if he doesn't deploy it, the percentage of cash of the portfolio level will go up. So it's just a natural thing, right? And for someone who is actually working, of course, that will be your cash cow, right? And
active
you
salary,
have a job salary or businesses, and then you just can't find idea, then that percentage will increase. But when the crisis comes, then you deploy, and that percentage of cash will drop.
I think Buffett in one time of his history, I think he did cash out everything because the market valuation was so crazy. Everybody's in the stock market, and he cannot even find any ideas. He actually cashed out. I think he returned the money back to his
But that was a long time ago.
That was a long time
Like,
ago.
it was a
But
much
since
smaller,
then, he has been just fluctuating the
if
share.
he were to do it now, all the share prices of the things he
Crash.
holds would be crashing.
Yeah,
It's
crash.
too big.
But right now, he's just like up and down the cash level.
Okay, I think that's really helpful. So if you're watching this right now and you're wondering what to do because, Buffett is holding on to cash, you're hearing talks about recessions, what should you do with your portfolio? I think what we shared is that you don't have to go, like you said, all in or all out.
Yeah.
It's still based on your fundamentals, what you're buying. Are they great companies? Is anything really overvalued? Maybe you can consider selling that if you want to lock in some of that profit. But at the end of the day, it's just the amount of cash that you hold, and it should be growing steadily if you're working. If you're not, maybe you got to recycle it a different way. But I hope that was really helpful for you, so you don't have to like panic and do drastic things either way. All right, so I think that's pretty much it, right, guys?
Yep.
Yeah.
All right, so my name is Adam, Rusmin, Victor.
Thank you.
Thank you.
So much for watching. Any questions about this, put them in the comment section. If you like this roundtable, please hit the like button. Tell us you're doing a great job. Of course, subscribe to our channel. Many more roundtables coming up, and we'd love to see you again. Thank you.